Good HDLC morning to everyone. Today, we are going to share with you the procedure in preparing a statement of changes in equity for a sole proprietorship. Let us talk about a statement of changes in equity or SCE. In SCE, we are looking or recording for the ending capital of the business entity. So what involved here is equity. Equity is the difference of asset minus liabilities. So we have the idea on what we are going to do later. We use SCE in recording total capital of the entity since it increase or decrease.
Components of SE. For the components of SE, there are three parts. The heading, increase in equity and decrease in equity. First part is the heading. It is composed of three lines. The first line is where we can see the name of the company, and the next line is the title of the report. And the third is the date of preparation. For the second part of SCE, it is increase in capital such as additional investment or contribution of the owner and a net income. As for this in equity, these are the owner withdrawals and a net loss.
ProBuilders Company started the accounting period with a capital balance of 300,000 pesos on December 31, 2019. During the period, the company suffered from net loss amounting to 90,000 pesos. To raise the capital balance, the owner made an additional investment of 150,000 pesos. However, the owner had to withdraw 25,000 pesos for an emergency purpose. Prepare the entity's statement of changes in equity for year ended December 31, 2020. In this problem, we need to prepare the statement of changes in equity. In preparing the statement of changes in equity, the first thing we need to do is prepare the heading. Our next step is to write the beginning balance of the period. The beginning balance is the ending balance of the last period, which is 300,000 pesos. After writing the beginning capital, we will proceed to adding the additional contributions. In the given problem, it is stated that the owner made an additional investment of 150,000. So here we will just align it under the capital balance. After that, we will compute for the total of all the contributions. We will add the additional investment to the beginning capital and we have the total of 450,000. But we are still not yet done. We have computed the increases to equity. Now, we will proceed to the decreases to equity or the deductions to the capital balance. As you have noticed in the given problem, it is said that the company suffered from a net loss with the total of 90,000 pesos. In the record, we will deduct it to the capital. Next is the withdrawals. Since the withdrawals also decreases the capital, we are also going to subtract it. For the last step, we will compute for the ending capital balance. From the total of 450,000 pesos, we will less the net loss and withdrawals, which will give us the total of 335 pesos. So for the ending capital of ProBuilders Company for the year ended December 31, 2020 is 335,000 pesos.
Now, we will continue for the problem number 2. Problem number 2. The owner's equity of King Baking Shop has a capital balance of 90,000 on January 1, 2019. Transactions affecting equity during 2019 are as follows. A. King Baking Shop, the sole proprietorship, provided additional investment of 180,000 to the business. B. King Baking Shop drawing during the period totaled 70,000. C. The business earned profit of 220,000. Just like what we did earlier, we need to prepare the heading. After that is report the capital at the beginning of the period, which is 90,000. Next step is to add all the contribution, and we have here the additional investment made by the owner and net income amounted to 220,000, and then we are also going to compute for its total. The next thing we are going to do is to deduct the owner withdrawals amounted to 70,000. After arranging all the account title, we are now going to compute the ending capital of the company. So for the ending capital of King Baking Shop for the year ended January 1, 2021 is 420,000.